Hi there, Serial Trader here. I'd like to present a trade idea on Facebook. So let's get to it. Now from the all-time high on Facebook at 218.62, we've had a very nice decline, and it subdivides quite nicely into 5 waves. So wave 1 down, that initial smash down on the earnings, wave 2 up, and this is a nice wave 3, nice and long, and then wave 4, and then wave 5 down to finish the move for either wave A or wave 1. And then we've had this reaction rally, this corrective rally as I have it labeled, and just a simple ABC up for either wave B or wave 2. And if we just do a Fibonacci retracement of the overall decline from the all-time high to the low we put in here in December, and I think we did just a near perfect 50% retracement. So you see that we just got right around that 50% retracement area, failed quite nicely from there, and you can see we start to have a bearish MACD cross on the daily chart here, and we got nice and overbought on RSI, and now coming off that quite nicely as well. And so far we haven't broken out of this channel yet, this ABC channel, but I expect that will come in short order. Now obviously the expectation now is that we come down in another 5-wave decline for either wave C or wave 3, and obviously depending how this decline looks and how long it takes and how low it goes and all that, that'll determine whether it's likely a C or a 3. But at this point, either scenario looking lower. And I like that this is also drifting down already, even though the market is still melting up. So it's showing relative weakness. And then certainly if the market itself can switch to being weak or bearish, that can only help this case. Although nice to know that it's not dependent on it. So this can obviously go down as the market's going up. So that's a nice lack of correlation in this case in a bearish sense. So I like that. And I'll just get rid of that. So basically, yeah, just simple 5 down, 3 up, looking for another 5 down. You know where you want to scratch the trade here. And, well, ultimately the critical resistance would be the high there at 172.47. But I'd cut this sooner than that, and I'll get to that in a bit. So I've laid out the Elliott wave kind of outlook here. Now let's go to the Thinkorswim candlestick chart. Now on the Thinkorswim candlestick chart, we'll go the daily first. And, well, first of all, you can see we came up. Obviously, this is a bearish chart. We're in a death cross. The 50 is well below the 200. It's been trending down nicely. We've had this reaction rally up. Now, we only went up to around the 200-day simple moving average, a little bit above it. But as you can see, basically failed, started coming down again. Stochastic oscillator got overbought. It's now coming off the overbought condition, nowhere near oversold. We have this nice gap here, that wants to be closed. And I believe that was an earnings gap from the last earnings release. So a nice gap to at least come down and test. We're below the daily T line. And also we've done a bearish engulfing candlestick on Friday and a close below the daily T line. The 3 T lines cross below the T line. So this is a very nice bearish signature. So all that is looking good. Now on the weekly chart, another thing that I like here. So we basically just came up to test the 50-week simple moving average. We did a, you could argue that this is an inverted bearish hammer, or at least a doji, right on that 50-week simple moving average. And then this most recent week that we closed out, we did a weekly bearish engulfing candlestick. So that's a nice sell signal as well on a weekly basis. You can see we got up into the overbought condition on the weekly oscillator. Now looks ready to curl back down. So plenty of room to the downside if this thing can really start gaining some traction. And I like that it's acting weak in a strong market, at least recently. And obviously if the market itself turns weak, which is certainly the expectation at some point, once it finds its top, that certainly won't hurt the bearish case for Facebook. In fact, I think it would help. But okay, that's the weekly chart. So I'm liking that signature. So we have a nice candlestick sell signal on both the daily and the weekly. The Elliott wave chart looks pretty compelling for bearish continuation. And what I did here, let's see. for a trade. I bought, let's see here. I bought some of the May 150 strike puts, and I paid $4.90 per contract on that. Bought 95 contracts. So basically what I'm looking at here, as far as managing the trade, I like the bearish engulfing candlestick. On a short-term basis, I'm going to kind of use this as a mental stop. I don't want to see it close back above. Well, certainly I don't want to see it close back above the T-line, and ideally I want to see the high of this bearish engulfing candlestick on Friday. I want to see that hold as resistance, and that high came in at 164.7. Also on the weekly, I don't want to see this weekly bearish engulfing candlestick become invalidated, and that would be invalidated if it took out the high, which was at 168.34. So those are the kind of the two significant levels I'm looking at, and obviously the ultimate invalidation of this bearish outlook would be taking out the high at 172.47. So yeah, that's what I'm looking at along the May 17th, 2019 150 strike Facebook puts. That's the trade that I've put on for this one, and certainly do some follow-up action or a follow-up video updating this as we go. All right, enjoy the long weekend. Serial Trader signing off.